Cool, thanks guys. So you were saying, is it okay to treat which candlestick as what?
Not candlestick, the whole channel, like as a ending.
This whole 4-hour corrective structure.
Yeah, as an ending triangle or something.
Yeah, that's kind of what I do have it in my mind. The only reason why I wouldn't say it's very much corrective is maybe because if I look at just the extreme levels, like maybe this is extreme resistance. After prices broke above this extreme resistance, we treated it as support. And after price broke above this new resistance, we've kind of, you can almost say maybe we've almost treated it as support, but the trend is fairly strong. Like we're not seeing very much corrective price action in a sense that previous resistance after it's been broken above, price action is being able to break back below previous resistance. So we're seeing a fairly nice trend, but the overall structure is still an ascending structure, and ascending structures normally break to the downside. So that's still why we have this whole ascending structure kind of like a bias and looking for that bearish bias price action. And as well as, I guess, maybe even if we drop down on a smaller or come just to the most recent structure over here, you've got some other kind of an ascending structure. Let me just see. Ascending structure started here. There we've got these two resistance areas there. So we've got sort of this ascending structure over here. We've violated at the third touch of this ascending structure. So what we can do is we can then now even focus on this new structure as kind of like a ending diagonal at that third touch, because if you look at the overall structure, we're at that third touch structure. So you can kind of see price action as it's creating a new structure at that third touch. So you can kind of focus in this structure over here, and then look at this structure as an ascending structure. So in this new ascending structure that we've got here, we're at that nice third touch now. So what we could be looking for is on a smaller time frame, maybe we're looking for reversal structures at this third touch region there. But because I've been seeing that it's not going to make a lot of sense for us to take a risk entry over here. You can see even here a 15-minute uptrend. So you even got a nice uptrend here. So what you can do for yourself is just wait. Know that once price action has first of all violated this uptrend, then we know that the uptrend has been broken. When price action then is able to push back below this resistance area here, then you know that any downside entries that you'll take below this resistance are going to be reduced risk entries, because price is now showing you some corrective nature. At the end, where we're expecting sellers to want to come in and where we're seeing that on a higher time frame, it looks like a lot of momentum to the upside. If we can see those sellers pushing price action back below this resistance, then we'll have an indication that, okay, cool, the trend is no longer as strong like on that higher time frame. Now we're seeing, at least on a smaller time frame, we're seeing markets starting to trend down, which is what we want to see if we're looking for those sell bias setups.
Sir, hello.
I'm still here, man. I can hear you.
Sir, it is the opposite of Euro USD.
Yeah, so DXY is kind of inversely correlated to Euro USD. So if we're looking for sells on DXY, we'd be looking for buys on Euro USD. The structure might maybe look the same, will look slightly different, but nonetheless, I think the analysis they're inversely correlated. So whenever we're seeing like dollar index maybe going up, like I'm assuming that Euro USD, let's just put on that tool. I'm assuming that Euro USD should be moving to the downside. Yeah, so Euro USD looks like we've got some sort of a descending structure. So at the same time, maybe if you were doing analysis on, why is my chart not moving? Oh, I'm on a 1 hour. Let me just go up to a higher time frame. So at the same time, we've got like some sort of an ascending structure here on the DXY. We can also isolate maybe a descending structure. If you're looking at Euro USD, this would be a descending structure on Euro USD. See, this orange chart that I have here is the chart of Euro USD. It's just slapped onto the DXY. So you could also have this nice descending structure on Euro USD, and your area of probability would be your nice third touch region there. And you've also got a nice support in this area here. So now that you've got a support, all you should be looking for is for reversal structures below the support over here, like those double bottoms, inverse head and shoulder structures. If you don't find any reversal structures, you know that this is your point of interest over here. This is where you're looking to enter the market, or where you're looking for your reversal structure to give you an entry. If you don't find any entry over here, then same thing, like we're going to exercise patience and wait for DXY to break back maybe below this resistance area. That would be you waiting for the DXY, I mean for Euro USD to push above these support structures here. And you know that you'll be finding reduced risk entries above those support structures there. Anything that you find here below is still in the direction of this current downtrend that we have on Euro USD. So yeah, it's inversely correlated. Thanks for those questions, guys. Thanks for those questions. Very informative questions. And I like that we're being specific to what we discussed.
Sir, I have a question, sir.
Go ahead.
4 days ago, I did buy your course and I have completed 50%. Sir, I have not one-to-one session, but sir, I booked a session with you yesterday.
Just check your DMs. I think I sent you this morning. I was asking you about your time.
I am from India, sir. I am very keen to learn from you.
Are you free at 1 o'clock? I sent you a DM this morning asking you about your timing, if you're free at 1 p.m. South African time.
Sir, according to me, I am from India and the time is now 2:23 p.m.
So is that a bit too late? Do you want us to make it a little bit earlier?
Sir, okay, but according to my time, the session with you according to my 7 p.m. 7 o'clock.
Okay, according to your time, 1 p.m. our time is 7 p.m. your time.
Yes.
Okay, is that a fine time for you, or is it too late?
Yes. According to me, you have to. I have to wait 2, 3, 4, 5, 6, 5 hours.
11,
5 hours later,
12,
you will have a session with you.
No, from once in the next 6 minutes, we're only going to be waiting 2 hours. Because in 6 minutes at my time now, it's 10:54. So in 6 minutes, it's going to be 11 o'clock. So from 11 o'clock, it's just 2 hours, and then that's our session time.
Okay.
So I think, yeah, just check in your time, but I'll text you on Discord. I'll text you maybe about 5 minutes, 5 or 10 minutes before the session.
You are saying you will start a session 1 p.m.
Yeah, 1 p.m. South African time, which is in 2 hours.
Okay, sir. But sir, 4 years ago, I am very struggling in Forex, sir. I need very good mentorship from you, sir. Please help me.
Definitely. I know where to start. And especially with someone
I will do, sir, everything. I am learning sir, please give me one question. I have one question. Sir, many traders say you have to take the trade only 1% money management, sir. But then, sir, how Lesiba, sir, turned their account 177 GBP to 3200 GBP?
Yeah, you see, when it comes to the risk management, you see when they say use 1% of your account. In other words, if someone's saying use 1% of your account, they indirectly telling you that it's going to take you 100 trades to blow your account. If they're saying use 1%, because you lose 100 times in a row, and after that you'll have blown this account, right? So the type of risk management that we do is that we still keep to a risk management, but instead we don't use this number to give us that 1%. Remember, 1% is us saying that we want to take 100 trades and then blow our account if we lose all. Instead, what we do is we look at our account balance and then we form risk management according to the account balance. Maybe if I have, for example, let's just say I've got $150, and I know that if I use 1%, I'm going to be risking $1.50, which maybe for me is too small. So instead of me saying that I want to risk 1%, which is $1.50, which is me otherwise saying that I'm going to be taking 100 trades, and before I blow this account, I can change this number 100 and say maybe I understand my strategy to the point where I want to take my risk a little bit higher. Instead of risking or being able to blow this account over 100 trades, I can then tell myself that because I understand my statistics, maybe I want to blow this account over 30 trades instead of 100. So now I know that if I lose 30 trades in a row, I'm going to blow this account. So all I'll do is just say 30 divided by my account balance, which is 150. That's 3, 6, 9, 12, 15. So that will give me 5. If I say 30 divided by 150, in other words, that means that I'm risking now, instead of $1.50 per trade, I'm going to be risking $5 per trade. Yes. So what I'm doing is, yes, I'm risking more, but I'm still doing some form of a risk management, which is me saying that if I lose 30 trades in a row, I'm going to blow this account. It's a different type of risk management. It's worse risk management than risking 1%, but it makes sense with my account balance, because my account balance is small, and if I risk $1.50 to make $4.50, maybe that's too small for me. But if I risk $5 to make $15, maybe that's a little bit better for me. So you see how I'm still using risk management. It's still a form of risk management, but now my risk management is more so being determined by my account balance and the way that my process works. Like I already know in my head that from my back testing, I'm not going to lose 30 trades in a row. So this type of a number makes sense for me. But if I know from my back testing that maybe I might lose about 15 trades in a row, like that's what my system tells me that I can lose, maybe I want to push this number up and say that, okay, just to be a little bit safe, I want to blow my account, my $150 account over the space of 50 trades.
Sir, I am very confusing which pair I will choose. Sir, please tell me which pair should I consider in first year, sir.
Okay, I think what we'll do is let's go over your questions when we have our session, just so that we can go through all of the pairs that we've got for the analysis. Then we'll go through in our session that we have privately. Then I'll go through all of the questions for you, man. Okay. No stress. Yeah, I think I was just thinking about what do I want to delete over here and what do I want to keep. Okay, let's just delete everything and start from scratch. Okay, so what we were looking at here on Aussie Cad, just from a daily, we were looking at this descending structure, right? So we had identified some resistance over there, some support over there, and we saw this nice descending structure. We saw some momentum pushing outside of this descending structure to the upside, which made us kind of want to be more bullish bias than bearish bias. After that, what we had in our analysis, I'm just explaining to you guys the development of our analysis as we've been following this pair. We then saw price action closing above this resistance and then below this resistance over here, this resistance trend line here. That gave us an indication that price is being corrective in this area over here. We then obviously had a bearish bias because we saw some momentum to the downside, but then obviously we concluded that, oh, we're stuck inside of a range because we have extreme resistance and extreme support. So selling probabilities from the low of the resistance, buying probabilities from the low of the resistance, selling probabilities from the high of this some sort of a range. We didn't manage to find, I don't think we managed to enter this trade off this head and shoulders here. I don't know if you guys saw the head and shoulders or whatever, but I know I wasn't involved in this bearish bias trade, but nonetheless, we had a bullish bias going into last week, expecting that we're coming towards the low of this range. And also, I guess if we go down into a 4-hour, we'll observe some nature's theory. But nonetheless, looking at where price action is right now that we've explained all of our previous biases, let me just delete everything and then we'll just draw only what's necessary to us. So the only things that I feel like are still necessary to us is maybe just this resistance trend line over here, just so that we remember that we've been breaking out of that trend line over there, and then just this support over here. So this is kind of the only structure that I feel like for me is maybe a little bit necessary. So considering that we've been looking for some bullish bias trading opportunities and prices being corrective in and around the structure, we've already seen price action doing something to this resistance. We broke out of this resistance and we broke back below this resistance. Price action is currently at the support. Price has already given us indication of maybe there being some corrective nature in price. So what I'm going to do is I'm still going to be bullish bias as much as we're seeing some momentum violating the support trend line over here, this horizontal support over there. Let's just wait and see if maybe tomorrow, whether or not we break and close below the support trend line. Let's wait and see if price action does decide to come back into this support structure over here. So in other words, I don't think I'm going to be trading Aussie Cad. I don't think it's ready for me or whatever the case is, but there is going to be a trading opportunity. And the only opportunity that I do see for myself is if price action does come back above this support structure here, I'll be more than happy to look for that bullish continuation. Because if you guys remember what we were looking for last week, the reason why we were bullish, I'm just trying to move my charts up a bit. The reason why we were bullish is because we were observing this descending structure over here. We had some resistance, taking into account, finding out how price is moving to the downside. And we also had some support from, I think, these support structures there, and we were looking for a third touch over here. So obviously, if price action can come back and break back into this structure, into this descending structure over here, meaning that if price action can come back into the structure, I will be looking to trade the structure because it is still a descending structure. We are still at the support trend line. And obviously, we do still see momentum pushing to the upside over there, being able to violate structure. What's forming inside of this area here, like we already concluded like 3 or 4 weeks ago, is some sort of a corrective structure. It's a complex corrective structure. I don't know what it is. It doesn't look like anything familiar to me right now. But what I am going to do is I'm going to exercise patience to wait for something that's clear enough for me to trade, to be able to develop. So this is all I see now for a trading opportunity for me. I'm not going to follow through and be pumped into whatever's happening here in terms of sellers being involved in this market. I'm not shifting my bias to be sell bias because we are still at the low of what we identified to be a range. So we'll see if price action does break and close back above this range, then we'll continue our bullish bias. Otherwise, let's pause and we exercise patience and wait for what we're expecting to see happen. So on Aussie Cad, I am still bullish bias, but we're not going to be trading Aussie Cad unless price action violates and comes back into structure. So I guess all I'll be doing for myself is maybe just setting this alert in this area here, just so that once price action comes back into the structure, then I start looking at this pair.
Tramayne.
Yeah, man, what's good?
Okay. I wanted to know if which time frame, which range of time frame is the best to take candlesticks confirmation, like, because in low time frames there are a lot of candlesticks formation, but they are not always correct.
So when it comes to your entry criteria, right? Because basically what you're asking about is what time frame is right for your entry criteria. There was I don't remember when it was, but we had some strategy building session or something like that. But otherwise, always think about your time frames. You can divide your time frames by 4. So for example, excuse me, for example, you always need 3 time frames, right? A high time frame where you look for your directional bias, a middle time frame where you look for points of interest, which is where am I going to trade this directional bias, and then your lowest time frame, which is where you look for your entry criteria. If, for example, you analyze on a daily, let me just do some time frames here below. If, for example, you analyzed on a daily divided by 4 would give you the 4-hour chart. 4 hour divided by 4 would give you the 1 hour chart. So now you know that the 1 hour is your entry. If you use the daily for your highest time frame, if you use the 4 hour for your highest time frame, 4 hour divided by 4 would give you the 1 hour where you find points of interest. 1 hour divided by 4 would give you your 15-minute where you look for your points of interest. I mean, your entry criteria. So you can follow the same structure. If maybe you're scalping, whatever the case is, and 1 hour is your highest time frame, then you divide that by 4 and use the 15-minute to find your points of interest. You divide 15-minute by 4. Okay, cool. You can't divide 15-minute by 4 because you get like 2 or 3 minutes, something like that, 3 minutes or something of that nature. So now you know that your entry time frames could either be the 5-minute or the 1 minute if you're scalping, and this is the process that you're using. So this is kind of how I would divide my different time frames of which information that I'm looking for. So remember, once you add a point of interest on your middle time frame, for example, maybe if you're at resistance and you're looking for now candlestick confirmation at this resistance, part of you having an entry criteria is or at least for me, my entry criteria, the first thing that I look for is a chart pattern. So as much as I'm looking to enter, I don't know where at this point of interest here should I be looking to enter. So if I find a chart pattern on my low time frames, which is maybe if I'm scalping my 5-minute and my 1 minute, if maybe I'm day trading my 15-minute, if maybe I'm swing trading my 1 hour, doesn't matter. But whichever time frame I'm looking on, I first need to look for that chart pattern. So if I'm on that 5-minute/1 minute, then I'm looking for maybe my head and shoulder structure, because my head and shoulders is going to tell me, don't look for this bearish engulfing, don't look at this bearish engulfing, but now this is a bearish engulfing that you can take, because now you've got a structure that confirms your directional bias. Still at this point of interest, if I miss this bearish engulfing, maybe the next bearish engulfing that I can look to take is maybe this bearish engulfing. You see, so I'm looking for just, the point is just that you've got an entry criteria. And I guess maybe if you want us to go a little bit more into this, then I'll just see there how we can organize your session.
Okay, thank you.
Oh, where? I don't know what just happened. Network. Why did my charts just disappear? It's me?
You went out like.
Oh, hi. Yeah, hey, technology is fighting back. Let me just delete this. Cool. So last week, I don't know if you guys, okay, let's just go over what we were looking for last week. So last week we had 2 points of interest where this was our highest sell. Remember, we're looking for some sort of a head and shoulder structure. We had another point of interest on a 1 hour somewhere inside of here, where we said that prices came blue straight above, whatever the case is. Yeah, otherwise guys, I closed out with 105 pips on this trade here. So I got out somewhere in and around this area here. 105. I closed out because I kind of was happy with what I with what I had. I haven't held 105 pips in a long ass time. Like that kind of a swing for me. Normally I'm on the 1 minute, and even though guys, I found this entry on a 1 minute. Even though I found this entry on a 1 minute, remember throughout the whole of last week, this was a swing trading idea for us. That's why I decided to try and hold on for as long as I could hold on. But otherwise, I did close out last week, and straight after we closed out, I was telling Jago that, yeah, man, I'm closing out just so that market can maybe give us a continuation and I can jump back in. Wow, market just dropped another 100 pips without no continuation structure. But it is what it is, because now we've got some momentum. We've got indication that the market does have momentum in the direction that we've been looking to trade all of this time. Because if we look at, I don't know, how far back can we go? The only time we ever see some momentum like this is here. This is like the last time we saw a serious aggressive move from sellers. Ever since, as much as yes, we've been seeing some sells happening inside there and wherever else sells have been happening, even this sell over here is not as aggressive as this momentum over here. Being able to even violate these equal lows over there, which we obviously, that's what kind of one of the reasons why we were happy being or okay with being sell biased, because we had an objective of price action coming for these equal lows there. So anyway, nonetheless, if we just go back to last week's analysis without really complicating things too much, just trying to move my charts down. Without complicating things too much, let me just do this, because that's not necessary for us. Yeah, without complicating things too much, guys, now we've got this proper looking structure. The structure that we were trading last week, now we've kind of got it. We've got our left shoulder in this area over here. We've got our left shoulder forming over here. We've got a nice head. We've got a nice right shoulder. Obviously, we know that any other entries will come. We've already got price action giving us a new lower low. We can see characteristics of a downtrend. Before, we couldn't see any characteristics of a downtrend. We had highs, we had higher lows, we had higher highs, we had equal lows. Once we had lower highs, and obviously now we have lower lows, that's characteristics of a downtrend. So all we should be looking for now is continuation for that downside momentum to complete our overall head and shoulder structure that we've been looking to trade. We've got momentum to the downside. We need to be looking for that corrective structure to be able to involve ourselves in the trading opportunities. Now, obviously, what we can do is find an opportunity for the highest sell. The highest sell for me would come at previous resistance that price action broke above and broke below. And this looks like it's pretty far for the current momentum that we've got going on there in the market. So all I'll do for myself is just take previous support that prices have violated. So this is the last support that was created on a 4 hour that price action with nice momentum has pushed below. So obviously we could be looking for continuation structures of this previous support that could function as resistance. So that's kind of the safest area that I would be looking to trade for some downside momentum. The reason why I'm not looking at a break and a retest over here is because if you guys keep in mind and never forget the rules that we always set for ourselves when we are validating a level of structure. And like I tell you guys that trading is about having things as objective as possible. If you still don't know what classifies a swing low or validates a swing low for you, or you're just guessing what's a swing low and what's not a swing low, that type of discretionary decision making is not conducive for long term. Like long term discretion doesn't work. It's like I don't know. And long-term discretion doesn't work. Your emotions, your mind, whatever, things are always just different. But a system will make sure that you always validate the things the exact same way. So otherwise, we always say that we want market to always create a level of structure, number one. Number two, we want the market to move away from whatever level of structure that we've just created. So obviously, price action hasn't really moved away from this level for us to validate this level of structure as an area where we want to look for trades off. So obviously, we wait for the market to create that level of structure, move away from that level of structure, come back to that level of structure, reject, and then obviously momentum shift away. And then that's kind of entry criteria for us to look to trade at a specific level of structure. So far, we have not seen price action moving away from this level of structure, but price has moved from this level of structure here. We've moved far enough away from this level of structure for us to now validate that level of structure. So we'll just be safe, try and find the highest sell that we can find. We are still nice and sell biased. Now, all we need to do is exercise patience, wait for that continuation structure, because we know we don't jump on the train while it's moving. We wait for the train to stop at the next station, and then we get on. So same, we need to wait for that corrective structure for price action to stop. Let's go on to the next pair. Let me just keep this as bullish because we were bullish bias on this pair. Cool. Is that right?
Oh my God.
Your washing is getting wet times 2.
So
Shame.
I have a question. Sir, what is the order block?
And it's jerseys on.
Sorry?
What is the order block?
Are you asking what is the order block?
Yes, sir.
Basically, an order block is the exact same thing as supply and demand. So basically, you for supply and demand. So let's just quickly maybe just say the difference between support and resistance and supply and demand. So for supply and demand, you only need one level of structure to create a level of supply or for a level of demand. For support and resistance, you need market to retest a level multiple times to create a support level. And then you can confirm that maybe this is support or resistance. So an order block is basically how someone would validate an area of supply and demand. Supply and demand only needs one swing low. If you want to say this is support and not supply, or I mean demand, then for it to be support, you'd need maybe for price action to come and test this area multiple times. That's the difference between support and resistance and supply and demand. So an order block is just a way of validating a level of supply or a level of demand, a level that's only been created with one swing. That's basically what an order block is. All right, let's come into some AJ. So AJ, I'm glad I'm not deleting much here. I think if I was to delete anything, I'll just delete whatever crap has been going on there. But otherwise, looking at AJ, guys, from a higher time frame perspective, we're still at that third touch. First touch there, second touch, third touch. You guys can see we're at this third touch area. We came there very impulsively. That's why we're waiting for reduced risk entries only, because we want to be sure that whatever buyers are currently involved in this market are now out of the market when we decide to now enter in opposition to the current momentum. Nonetheless, we've been at this third touch region over there, identifying some ascending structures. Nonetheless, on the 4-hour, I think we were looking at an ascending structure that looks like this from inside of here. This looks very awkward. I don't know if we were looking at this structure. We were looking at some sort of a structure that looked something like this, that looks something like that. I don't know, but we had an ascending structure that we were looking at somewhere inside of there. But nonetheless, just accommodating for new support structures over there, disregarding this because it's not important to us. All we've got there is these equal highs, price action violating these equal highs up, breaking back below. We've got a beautiful, beautiful, beautiful. I think this is absolutely sexy. For some points of interest, guys, price action has left behind some beautiful, beautiful areas where we could be looking to trade. This then functions now as our highest sell, which is a nice point of interest. We can see a nice point of interest, the area of supply, like we were just kind of explaining there, nice area of supply, close to this previous resistance where we obviously can expect price action to come back and retest. Then obviously we've got another area down over here, which kind of almost aligns, not perfectly, but kind of almost aligns with this previous support structure here that price action has violated. Previous support structure that we've just violated now, where obviously price action can come back and retest. This is a nice point of interest just above those area there. So obviously we've got some indication now that momentum is to the downside. We've been looking to sell for the longest of time, and it's not our job, guys. Remember that our job is not to find every move in the market. As much as maybe I can say, oh, I've been looking for a sell, whatever, and then I see momentum coming into the market and I wasn't involved in that sell. My job is not to catch every single move in the market. My job is to trade at areas where the probability aligns, areas where if I put my own money there, I take a risk, I should be more sure than unsure that me taking that risk is going to benefit me in some way, whether it's in terms of experiential knowledge, whether it's in terms of the trade going good, whether it's in terms of whatever. the opportunity to manage according to my system, doesn't really matter. But I want to take a trade in an area where obviously the probabilities align and where we can make money. So taking things into account, whatever, all that nice good stuff, our job is not to catch every single move in the market, every single down, every single up, every single down, every single up. But our job is to catch an area or an up or a down move, obviously, that has better probabilities for us to actually make money and maybe even capitalize on higher time frame momentum. So otherwise, all we're going to do is market is currently moving. There's nothing that we can do while the market is currently moving. We always wait for these corrective structures to be able to trade for the next momentum that we see coming into the market.
And I guess
All we'll be doing is we'll just be
camera
waiting for that nice corrective structure to form so that we can look for
session.
the continuation to the downside. Nice and simple, guys. Nice and simple. I think let me just mute everyone there because I can hear someone's. Cool. So I'm still sell bias. Obviously, we've got to exercise patience now because we always trade according to a plan, according to a system. But nonetheless, we've got a nice area of probability there. Let's go on to some AU. Cool. So all of our previous analysis was an AU. AU wasn't in a good mood. She didn't want us to jump into the sell, but otherwise we were looking for that high sell. Obviously, previous resistance, that price action has broken above and broken back below. We had this nice point of interest just above there. Yeah, but she wasn't interested in whatever we were interested in. She was doing her own things. So let's just delete whatever is not really necessary to us now. Just delete all of this nonsense. Yeah. Cool. So looking at the overall structure, we still got this nice ascending structure there. And yeah, I guess I hope you guys can see, like, throughout all of our analysis, I hope you guys, more than anything, if you guys are always following every week or whatever the case is, I hope that you guys are watching how price action develops and seeing how maybe we've got a particular bias or we've got a particular directional bias. The tools that we use to make sense of the market are our process. What the market is doing, no one knows. No one understands. No one knows what the market is doing, how the market is going to do whatever. But we've got tools that help us make sense of the information that we obviously use to make this. Number one, we make sense of the information. Number two, we make a decision from the information that we've used to make sense. Now, for us to say that, yes, maybe we sell bias and whatever the case is, and we're looking for this price action over there, we don't know how price action is going to deliver this sell move. We have no idea how is price action going to do that. We expected maybe, oh, after this corrective structure here, we're going to break below whatever. We kept on evolving as the structure was developing. Why? Because we have particular concepts that we use to make sense of the information that the market presents to us. Now, these concepts that we use, obviously, they enable us to trade at areas like I've been saying previously. They enable us to trade in areas of probability where my system best functions. Now, for example, maybe if I had went against my system and taken an entry somewhere, I don't know, maybe taken a breakout or whatever the case is, assuming that, I don't know, whatever. Maybe I would have been stopped out by this move to the upside, and then I see the momentum and I would have taken unnecessary risk. It doesn't really matter the fact that maybe we missed this sell opportunity because price action didn't come give us entry criteria, whatever the case is. We didn't take any trade. And because we didn't take any trade, it gave us the opportunity to learn from how this price action develops. And also at the same time, our account balance is still the same. It's still net positive if you guys did not take any risk and get stopped in along this chop or whatever the case is to the downside. But otherwise, yes, we've got some downside momentum. Let's just speak about what we're going to be doing now. So we've also violated this nice ascending structure over there. Whatever the case is, nice, beautiful area where we're going to be looking to trade is previous support that obviously we can see price action breaking below with nice momentum. So we've got this previous support structure over here where we can see price action nicely violating over there. So obviously price action is currently in the momentum. So we need to be waiting for the corrective structures to be able to get involved in the price action. So that's all we're going to be doing. Exercising patience. We are sell bias, but unfortunately, because we always trade according to higher time frame structure, we're going to need to exercise patience and wait for that corrective structure to be able to trade in the direction of this most recent downside momentum. Let's go on to some Susein.
Hello.
Yeah, what's good, man?
Okay, Tramayne.
Yeah.
Can we use the knowledge, the Forex analysis on South African shares, even though they lack the volatility?
Definitely. Definitely, man. That's a very interesting question, and now I see what kind of a person you are. But yeah, definitely, dude. Definitely, that's actually a very smart thing, because remember that, like, okay, so I guess a lot of investors that invest in shares, or at least from what I've heard, they've given up on timing the market. Like, timing the market is not a thing that investors try and do. Investors are trying to find opportunities and not specific moments. So I guess using technical analysis, you can improve the element of timing. Like, when should I, yes, I know maybe I want to buy some share of Tesla, or whatever the case is. But now, according to technical analysis, does technical analysis allow me to get in at an area where I see value, or at an area? Because you know that a company is basically, the way that a company trades is that the price of the company, when you're looking at a share, is traded against the actual value of the company. So the price is kind of like, if maybe a company is, the price is valued less than what the actual valuation of the company is, you can guarantee that over a long period of time, price is going to go up to meet or to kind of equalize according to the value. The price should be equal to the value of the actual thing. And if maybe something is valued more than it should be valued, eventually price action will come down and meet the valuation of the company itself, because eventually truth always comes out at some point in time. So that's kind of like, you've got a direction based off whatever other fundamentals or whatever, but you can use technical analysis to maybe help with regards to your timing of when is the right time to actually jump into the market. If maybe fundamentals is not the basis of the reason why I buy and sell shares. But yes, definitely, man, you can.
Since in South Africa, the shares, if you've seen the share price, like those charts are ugly. Like, they jump a lot, and the candlesticks don't. You can't get candlestick perfect, good candlestick confirmations. So is it correct to, like,
how I trade, I won't say trade because I'm not day trading, but how I enter is that I enter at points of interest there. Because remember that I'm not looking to enter to be able to put a stop loss, to be able to whatever. When you buy a share, you buy, and for example, if I bought 10 Rand worth of, if CHFJPY was a company, and I bought 10 Rand worth of CHFJPY, and CHFJPY moves from 10 Rand all the way down to 5 Rand. I still have that one share, but now my one share is now valued at 5 Rand. It's no longer valued at 10 Rand. So I'm not buying to add a stop loss, to add a whatever, unless maybe I've got some type of a strategy that I'm using, that if I buy a company and it decreases more than 3%, then I'm out or something, unless I have a process. But otherwise, remember that when we're buying for long term. We're not buying for I don't know. We're not buying for, let's look at GS30 maybe as an example. Let's look at GS30 as an example. Like, maybe if I was an investor and I was investing in Tesla or whatever the case is, maybe I would be looking at previous resistance and just say previous resistance is a POI. That once price action breaks above previous resistance and comes back to this resistance, when it's at this area here or around this price region, that's where I'm going to buy some stock. Maybe when it breaks above this resistance, and then when we come back to this resistance, we're in and around this resistance again, cool, that's where I'm going to buy more stock. I'm not looking for candlestick confirmation to enter, because obviously in this case, I'm not day trading. I'm investing for long term. I'm not planning on holding it for 2 or 3 months. I'm planning on holding it for 6+ months. If I buy a stock or a company or whatever, 6+ months should be your minimum term that you're looking to pull your money back out.
Okay, I.
Now, yes, man, if you're trying to day trade like currencies and those types of things, like for the short term, you're gonna need a lot of money to do that, to be able to make like reasonable cash. And if you're gonna do it that way, you're gonna make your brokers very rich, because I can guarantee you that spreads and all of those things are so much higher. Like, if you're buying, for example, if you're buying Microsoft without margin and leverage, and like you're buying shares or stocks or whatever the case is of Microsoft, you'd find out that the spread is like 5 cents or something of that nature. Whereas if you're going to trade Microsoft with margin and leverage using a broker that allows you to trade using market margin and leverage, your spread will be something like 200 pips, which is 200 pips versus 5 cents. 5 cents is 5,000 pips of spread. if you're going to buy shares or stocks or something of that nature. So if you're going to try and do that and think that maybe you're going to be in and out in a short period of time, you're going to make your brokers very, 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 very rich, man. They'll be taking a lot of your cash, a lot of it.
I'm invest more in long term then. Thanks.
Then 6+ months, 6+.
Okay.
Oh, yes. So let's get into some Susein, guys. Let's get into some Susein. So Susein, yeah, you guys know that we've been evolving and exercising patience. But yeah, Susein is looking, I guess, a lot better now. I'm feeling a lot more okay with beginning to put her on the priority list for the coming weeks. So obviously looking at where price action is now, we've got an ascending structure. Okay, cool. So just maybe to explain higher time frame structure, we had this higher time frame ascending structure. We saw momentum to the upside, violating this ascending structure. But what are we? We are very stubborn. We're still not following and jumping into the buys according to whatever's going on here. We've been waiting for sell buyer structure to form. And finally, good enough, we've got an ascending structure. This ascending structure has broken to the downside. If we take a look though, now let's analyze. We're on the 4-hour, we can get an idea of the nature of how price action is doing, whatever it's doing, where we are within the structure. Yes, we've violated our support trend line over here to the downside. Nice and beautiful. We've got our highest area where we're looking to sell. Okay, cool. Price action did come and tap into that area there. Let's just delete that. Maybe we'll find something else another time. But otherwise, if we look at the current trend, we just look at the current trend. We come from down low. We could come from creating some resistance. We come from down low, creating a new high. We then give a higher low. We then give a higher high. So obviously things are still bullish when it comes to Susein on a 4-hour. Where are we within the whole general structure of the market, or whatever the case is? We're coming towards this previous support structure over here. Let me just do this because I can see some danger here down below. But otherwise, we've got these previous support structures over there. Cool. So higher time frame, yes, I want to be sell biased, but looking at the nature, what I do see here is obviously a lot more momentum moving up than we have moving down. Just the most recent price action. And if we were to argue, like I always tell you guys, you should be able to argue your point of view with anyone. Not argue in a sense that you are right, but argue in a sense that this is your process of defining things. This is how I define momentum, and no one can argue against me with this process. I look at how long market has taken to move up. If market has taken, I don't know, what's this, 18 bars, which is 5 days to move up, and market has taken, I don't know how long to move from this resistance down to this support. It's taken 5 days and 20 hours. Market is taking a lot longer to move down than it is to move up. So that means there's more aggressive buying going on. Price moved up more aggressively, more faster than it's moving down. So for me, momentum is to the upside, just most recent momentum. So taking a look at what we've got here, obviously things are extremely bullish and we add support. So it makes a lot more sense to be a buyer than it does to be a seller. We know that higher time frame, we want to be sellers. So all we need to do is we either change the buyers, look for those bullish bias trading opportunities, or we sit on our hands and wait for price action to give us whatever upside momentum this pair is kind of printing out there. I'm just trying to concentrate and make sure that I take into account just my relevant structures. We can either shift our bias, be bullish bias, look at the momentum going to the upside, consider, oh, cool, prices at support, we've got a nice point of interest over there, allow price action since we've got, okay, cool, since we've got these support structures over here, and as well as these support structures over here. Cool. So most recent price action here, we'll just use these support structures. You look for your reversals down below. If you don't find a reversal structure down below, you wait for momentum to give you some momentum up back above these supports, and then obviously you look for that continuation to the upside. That could be a setup if you want to trade in the direction of the momentum. Otherwise, if you want to trade higher time frame, the higher time frame directional bias, then we're obviously exercising patience, allowing price action to come to the upside, where we'll be looking for our higher time frame momentum to the downside. That's kind of, I guess, the two case scenarios here on Susein. So what I'll be doing is, I don't think I'll be very interested in looking to buy Susein since I've been, I mean, come on, really, I've been patient enough waiting for the sell all of this time, and then all of a sudden now that structure is starting to look like a sell. There's also buy bias. So why am I taking the buy now? I mean, I think there's thousands of opportunities where we could have been involved in a whole lot of buys, but we chose to wait for the sell. So I feel like I'll still have enough patience to still exercise and wait for this sell buy trading opportunity. So I'll wait and see if momentum does push to the upside, does break above this descending structure. We'll obviously be happy because that gives us an opportunity to sell as high as we can. Otherwise, price just may be faking buyers into this market and will give them a nice reason to buy a nice bullish engulfings and then just destroy them, and then obviously maybe give us some nice breaks and retests for that continuation. Who knows? But otherwise, I'm still sell bias. I'm going to exercise my patience. I'm not going to be buy bias on this pair. I'll wait. I will wait for higher time frames to align in the direction. Yeah, I always think of what's this guy's name? What's that guy that made a lot of money that broke the Bank of England, or the Bank of
George Soros.
George Soros. Is it George Soros?
It's George
Yeah.
Soros, the one who was lying about the pound dropping.
Is it? He's Berkshire Hathaway.
Warren Buffett.
Warren, okay, that's the name I was looking for.
Second
Warren Buffett made a very nice quote, and he said that the market is an environment that takes money out of the pockets of the impatient and put that money in the pockets of the patient. So I always think about what he says here, but obviously I do understand that he's coming from an investor's perspective. So he's obviously, those words are from the perspective of an investor. I mean, he's not looking to jump in today and jump out tomorrow. He's looking to hold for months or years or whatever the case is. But I feel like it's still very relevant to us that are day trading, that if you exercise patience, it kind of allows the market to develop and give you more information so you can make a better decision a little bit later on in the future. So coming into things here, guys, New Zealand dollar CAD is just the mother of all patience givers, because we've been waiting for buys from these support structures over here. So from here, guys, we've been looking for buys, but price decided to enter some sort of a descending structure. But as you guys always know, we didn't even buy this not once. We didn't lose money not even once, because we've got a process. We know we're waiting for entry criteria, and we will keep on evolving as long as the market does not give us any entry criteria, we won't pull the trigger. No matter how strongly we convince that our bias is buy or our bias is sell or whatever the case is, the market is going to tell us whether or not whatever we're assuming is happening and should be, or are we able to pull the trigger and take the trade. So obviously now all I've done is just kind of evolved, since I still do have a nice bullish bias on this pair, considering the higher time frame descending structure and the momentum to the upside that just gave us a higher high. It's been a while. We've all of a sudden, we've always been seeing lower highs, lower lows, and this is obviously the first higher high that we've seen developing. And after we see market give us a higher high, what are we expecting? We're expecting maybe the trend has changed. We're expecting a higher low. We're not expecting price action to come and violate this support structure over here. So otherwise, for myself, guys, I'm still very, very much bullish bias, just coming into the most recent price action over here. But I identified, yes, there is momentum to the downside, but obviously you guys can see that we then entered some sort of a corrective structure where we have supports being violated, price action breaking back above. We have new supports, price action being violated, price action breaking back above. And then we have all of this crap over here that's going down on a smaller time frame, which makes me very excited, because what is that telling me? That's telling me that there's no momentum to the downside. Yes, price is consistently making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, low. It's in a downtrend, clear enough, obviously enough. But that downtrend is not an aggressive downtrend. There's no momentum that is moving and that is pushing this market to the downside, because we're moving to the downside very much correctively. So all I'm going to be doing for myself is just obviously isolating whatever corrective structure I have over here. Let me just move this back so that it does not disturb what we've got going on here. Let me just see what extreme resistance we've got going on here. Cool. So I can see here we violated the support trend line over there, but I kind of I don't want to accommodate for that support trend line as yet, unless we include these lower stuff. Nah, that's just going to make the structure look weird. But otherwise, to be safe, we've got previous support over here, previous support that we obviously see price action breaking back below, breaking back above. We're at that area right now, which makes me kind of very excited. I think New Zealand dollar CAD is very much getting ready for me, very much getting ready for me. Ooh, and we've tapped into this nice, beautiful point of interest over here.
Or it is a head and shoulder pattern.
Tool, we've tapped into this nice point of interest over here. Awesome. Guys, I feel like New Zealand dollar CAD is kind of getting ready for me to want to be able to pull the trigger. So what I'm going to be doing here is I'm going to be waiting for a structure to develop, some sort of a double bottom structure, whatever the case is. Doesn't really matter whether it's a double bottom. All I'm waiting for is I've got a point of interest, right? This is where I want to find candlestick confirmation. I see markets reacting from this area as yet, but I don't know if it's the right time for me to enter. So what am I waiting for? I'm waiting for a structure. If I find a double bottom structure in here, the double bottoms can tell me that, okay, now at the second peak, if you find a bullish engulfing or a bullish pin bar, that could be your entry trigger. If I find an inverse head and shoulders in this area over here, the inverse head and shoulders can tell me that, okay, now at this area here, look for your candlestick confirmation. If I find a descending structure forming in this area here, the descending structure can tell me, okay, now this is the bearish engulfing, the bullish engulfing that you're going to be looking to take as your entry criteria. So all I'm doing is now that I've got price action in the area where I want it to be for that bullish buy setup, I need to wait for a structure, a chart pattern that allows me to pull the trigger. That's all I'm waiting for, to be able to pull the trigger and say now is the right time to look for candlestick confirmation, because now I have a structure that tells me, yes, price is here where you want to trade, but where here do I look for the candlestick confirmation? Because there can be 10,000 bullish engulfings that happen here. But a chart pattern will tell me that this is the right one that you should be looking to take, because now we have a first touch, second touch, third touch, or we've got a double bottom, or we've got an inverse head and shoulders. So that's all I'm waiting for now, since price action is giving me some sort of entry criteria. I think New Zealand dollar CAD for me is kind of, she's setting up very nice. Otherwise, what I will be looking at, because we did see on a, I think it was a 1 hour, on a 1 hour price action, looks like we could reject. Let me just delete these drawings. Let me just delete these drawings. You guys can see on a 1 hour, it looks like we're going to be rejecting from here or whatever the case is. So it'll also be nice if we do see maybe the price action fails to close below this support structure here on a 1 hour, then maybe even the next candlestick that might come down, I might still be looking to trade that candlestick, because I can already see there's someone that's looking to buy here. There's some momentum that's happening here, and there's someone that's keeping price action above this previous support structure over here. So even if price action decides to come down, maybe we're just coming down to give us some sort of a corrective structure, whatever the case is, because remember, we still are within a nice descending structure. So we still can be looking for a structure that can develop like this for us to be looking for some upside momentum. So otherwise, once we find a chart pattern, guys, the chart pattern here on a lower time frame will tell us where to pull the trigger. Where should we look for that candlestick confirmation? But otherwise, we bullish bias on this pair. Can I just set myself some alerts just so that I am well aware? So the first alert that I'm going to set is maybe just somewhere up here, just so that if price action moves away from this area and I'm not watching it, I can see what's going on there. And then also just below this low over here, so that if price ever leaves this area here, I will know price left this area. So I need to come and watch what is going on. Yeah, if I'm ever not at my PC and price decides to just do something weird. Yeah, setting alerts can be very helpful, guys, because you sometimes, like myself, I'm a very much technical based trader. I don't even look at news. I don't even know when was the last time I decided to go and check when is NFP or when is whatever. I don't even look at news. So for me to stay safe, or for me to always be on guard, like maybe sometimes you see like this alert is very far from where price action is. But can happen that there's a news event that can just send prices haywire and the market just moves in a way and you come back and you're shocked, or whatever the case is. But nonetheless, let's just speak about some New Zealand dollar yen, see what we've got cooking there. Let's just delete some of last week's stuff that's not relevant. I think this is not relevant to us. This is also not relevant. This can delete it. Okay, let's just move it there. This we can delete. This we can. Cool. So on New Zealand dollar yen, it's the same as the JPY code pairs, guys. If you just have a look at all of these JPY code pairs, we've been exercising the exact same amount of patience on these pairs because they all look like nonsense. If you look at AJ, it looks exactly the same as Susein in a way, it looks exactly the same as New Zealand dollar yen. They all just saw a whole lot of buyers coming into the market for whatever reason. But otherwise, yeah, it's very weird, guys. It's very weird that we're seeing a lot of, okay, it's not very weird because if you guys remember, I think around this time, somewhere around this time, there was some earthquake or whatever in Japan and whatever, that could be responsible for JPY weakness. But what's very confusing to me is the yen is a safe haven currency, and we can see that the world is crashing and burning right now. There's wars, there's civil wars, even in the almighty United States, shit is hitting the fan. So why is the safe haven losing strength? Why is the safe haven losing strength? Yeah. Anyway, coming back to the structure, we at this third touch. We at this third touch region over there. I think we've got some previous resistance over there. So obviously we at that third touch now. Prices came here fairly impulsively. So when price action comes impulsively to an area where we're looking to do the opposite, which is sell, we need to wait for a reversal structure to confirm that the buyers that are involved in this market have now left the market, or at least now there are sellers entering the market. And already from a weekly, I can see some sexy pins to the upside, like some nice pins to the upside. So otherwise, let's come here to just this most recent structure. So last week we were looking at this ascending structure, first touch, second touch, third touch. Yeah, cool. So we weren't interested in any risk entries. We were only looking for reduced risk entries because price action was still fairly in an impulsive momentum to the upside. But now what we do have is, if we look at the overall structure, we see a nice uptrend, cool, nice. Now we have price action violating support structures. So obviously we have our first indication of some characteristics of a downtrend. We are finally seeing support structures being violated. So what we have here, obviously previous support that functions as resistance, cool. Nonetheless, we've got previous resistance, most recent resistance that price action has violated above and obviously broke back below. And we've got a nice point of interest just above there where we see some momentum shift. So we've got a nice bearish engulfing in this area over here, giving us a nice indication of momentum shift, which can be or can function as a point of interest for us to find downside continuation. So since we are bearish bias on this overall structure over there, yeah, cool. I feel like we should be able to, or let's also talk about this high sell over here. Let's draw this nicely. Cool. So these are the only two resistance areas that I'm going to be looking to look for some downside continuation. This area, because it kind of aligns with this previous resistance area. This area over here, huge momentum shift, nice big bearish engulfing over there, and also kind of does align with previous support over there, and as well as this resistance that price action broke above and has broken back below. So obviously these areas here are valid enough because price action has moved far enough away from those areas over there. We are currently inside of momentum, so we need to wait for that corrective structure to be able to give us a reason to sell at these points of interest. Obviously, if the setup fails in this area here, this is the next area where we'll be looking for that highest sell. And we're bearish bias. So otherwise, unless price action comes into these points of interest over here, we're not looking to do anything on New Zealand dollar yen. So once price action comes into this point of interest, that is only when we drop down onto the smaller time frames to start looking for those chart patterns for our entry criteria and candlestick confirmation. Otherwise, if price is not at our point of interest, then there's no even reason for me to drop down onto my 1 hour to see what's going on, onto my 15-minute, because price is not where I want to trade it anyway. So otherwise, yeah, bearish bias on New Zealand dollar yen. Last pair of the session, guys. Last pair of the session. Let's go into some US 30. Okay, let's delete what's there from last week. Yeah, hey, this sell was a lot more aggressive than I expected. And if it had tapped us in, guys, we would have found such a beautiful, beautiful, beautiful sell. Like it came close to the point of interest, but unfortunately didn't tap. I don't know if it was maybe following on this ascending structure over here or whatever the case is, who knows. But yeah, we didn't tap into that POI. Let's just delete that. Delete this. It's not relevant to us anymore. Delete this stuff. Yeah, USD gave us some beautiful trading opportunities last week. I think I owe most of my account growth last week to the US30 and some of it to Aussie Swiss franc. Like exercising patience, guys. One trade, I think I made almost 12% on Aussie Swiss franc from that sell that I found last week. And if you guys saw how last week was, we've been looking for trading opportunities on so many different pairs, but none of them gave us our entry criteria. Aussie Swiss franc was the only one that gave us that entry criteria. But just by being stubborn and waiting for what I'm waiting for and not willing to compromise and take just anything that I find, I guess I can see the long-term results of the statistics playing out. Because like I tell you guys, like equity curve is a very weird thing. Like you start my account maybe on $50 or whatever the case is, you find out that my account balance stays around here, maybe it drops, we go all the way to 40, maybe it comes back up to 30, maybe it goes all the way to $60, comes back down to 40 something dollars. And then I find one nice trade that moves my account now to $80. And you find that now I'll be stuck around this $80 range for the longest of time doing the exact same copy paste of this before I find another trade that moves me to the next milestone or to the next whatever the case is. I feel like that's kind of long-term how my equity curve looks. Yeah, Abhishek?
This is the very best thing you are saying, sir. This is the very best thing.
No problem. I'm glad. I saw your face. I think you're also going through something that's very similar. Yes. And it's very realistic that equity curve, like my equity curve, that definitely does not look like that. It's not a nice gentle up curve or whatever the case is. You'll find out that maybe I can be stuck for, if I'm at $100 or whatever the case is, maybe I'll be stuck at $100 for maybe even 2 months. I won't be able to make money. I'll be going down, I'll be going back above, I'll be feeling nice, I'm at $150, and then I enter some losing streak that brings me all the way back to 100 or whatever the case is. But eventually, I will find a trade that will push me to the next milestone. Like one of those trades with good risk to reward ratio, one of those winners that I just let run will eventually move me to maybe $180 or whatever the case is. And if I know that maybe my maximum drawdowns are about $50, I know the lowest I'm gonna go is maybe $130 or whatever the case is. But yeah, I always tell Mamba that for me, out of everything, I don't feel like being able to analyze is my edge. I feel like for me, my main edge in the markets is being able to manage risk, like risk management, the elements that are around risk management, like me being able to find entries where I'm risking the least that I can risk, like I can risk $1 on the trade to make $100. Like those are the kind of trades that I try and find. I try and find trades that I can lose 1,000 of them and it doesn't really move my account. But if I find one of them that even gives me like 30 pips, I'm sitting nice. Because okay, anyway, yeah, let's go into US30. Let's go into US30. Let's go up to a daily because I want to see what's happening here. High time. Okay, so US30 looks like we in some sort of a seek and destroy period now, because we've got some extreme highs. I see extreme highs and I see extreme lows. Cool. Inside of this, the structure inside of the extreme highs, we've got some lows, we've got some highs, we've got some new lows. This was kind of our higher time frame objective. What we see just most recently, we see price action giving us some sort of a double top structure, and we see nice momentum violating these support structures over there. So what we have here is we've got some nice extreme highs, we've got some nice extreme lows, we've got also this most recent structure over here, and we see some momentum to the downside. So what I'll be doing for myself is looking at the overall structure. I've got previous support in this area over here that can function as a nice level of structure for me. Let me just delete this. delete this. Since we've explained all the important levels of structure here on a higher time frame. Cool. So we've got previous support in this area over here. We can also see that price is doing something in this area. Maybe we can say that price was giving a double top structure or whatever, but my conclusion is that price is doing something in this area here, because what we've got, what is this guy laughing at? You're watching, hey guys, nice live. Let me show you guys what the nice live, what the nice live looks like. This trader is sitting next to me. This trader is sitting next to me. And this trader is busy, I thought he's trading, but he's busy watching comedy here on YouTube. See, when someone's making money in silence, he's just sitting in a trade, busy making money, and now he's got time to just chill and watch YouTube. Hey, man. What are you about? What lunch are you buying for us today? You're buying us lunch today because I can see you nice there. You're nice there. You in some nice, you can see when a trader's in a nice trade. They can't hide it. Anyway, so coming into some US30, guys, we've got US30 doing something in this area here, right? We've got some support. We see price giving us some support, giving us some resistance. We see that violation of price action of the support breaking back above, giving us some new support. We see price action violating this previous resistance, giving us new resistance. So in a way, it's some sort of, I don't know, some sort of an expanding structure, because we're violating support and we're violating those resistance areas. So my conclusion, anytime I see, for me, if I don't get proper characteristics, right, I know that if I see lower lows, lower highs, and lower lows, I don't care how they look. As long as they are lower lows, lower highs, and lower lows, for me, that's a downtrend. If I see higher highs, higher lows, and higher highs, doesn't matter how it looks, whether it's corrective, whether it's impulsive, this is an uptrend. If I don't see this, or this, the market is moving sideways for me. Here, I don't see consistent higher highs, higher lows. Whatever the case is, market is moving sideways. As much as maybe I could argue that, okay, there's momentum to the downside, or whatever the case is, from a structural perspective, the rules that I've developed for myself, market is moving sideways in this most recent price action over here. So considering that, and looking at all of this momentum here, looking at this level of structure over here, let me just delete all of this nonsense so that when I go down until 4 hours, there's no
shoulder pattern, reversal head and shoulder pattern.
Yes, there's that larger inverse head and shoulders where we've got our left shoulder here, we've got our head, and then this is kind of like the formation of that right shoulder. So for that inverse head and shoulder setup, obviously we've got this previous support over here to be looking at, but I know on a smaller time frame, I don't like this spike here. I don't like this spike. I told you guys that someone is making money next to me. He's busy telling me while you're speaking about US30, he's showing me that he's in a buy already, long time, while I'm busy. Man, I can see when a trader's making money. You can just see the body language. You're busy chilling here, enjoying, laughing. And otherwise, I don't like this spike here, guys, because on a smaller time frame, this spike does function as a level of structure. There is a level of structure inside of there. But nonetheless, what I do have here is this previous support area there that prices broke below and broke back above, where I can be looking for some upside. Now, because there has been this hectic momentum that's been pushing prices to the downside, obviously for some downside continuation, we've got previous support that functions as resistance. We've got previous support, price action has created this level of structure, moved away from nice and impulsively. And so obviously if price action does come back here, especially if we come back here correctively, then I will be looking for some downside continuation because I'm a technical trader. I trade the structures, the momentum that I find over here. So obviously if we've come here correctively, then I'll be looking for some downside continuation. Right now, we're at some support regions. So it makes a lot more sense for me to be bullish biased than it does to be bearish biased. As much as there's a lot of momentum in this market, all I need to be waiting for to be bullish biased on a smaller time frame is for a structure that allows me to be bullish biased. Like I don't ever make my bias influence my decisions or whatever the case is. If I don't find a structure that allows me to be bullish biased, then I'm not going to take any trade. So otherwise, looking at things here, only structure that I do have here is just taking into account whatever descending structure we've got there, because we can see, yes, Price action is giving us lows, lower highs, lower lows, lower highs, lower lows, lower. But every low, obviously, we can see price action is being corrective around those lows. So we're moving to the downside, but in a corrective structure, some sort of a corrective manner. So taking into account our extreme resistance and taking into account our extreme support structures that we have over there, I've got a nice descending structure that has given us first touch there, second touch there, and a nice set of equal lows over here, beautiful set of equal lows. And now that we have equal lows and we've got a point of interest down there below, all we do for ourselves is we wait for price action to violate these equal lows. Obviously, we look for reversal structures below, like our double bottoms, our inverse head and shoulders, our descending structures. If we don't find reversal structures below, we wait for momentum to push price action back above these supports, where we look for that continuation and retest. So this is a setup that I've got for any bullish bias setup for the day. Otherwise, for any bearish bias or any sell bias trading opportunities, I'm waiting for price action to come back to these previous support structures there that could function as resistance. And here's a nice pull. Hey guys, we should have came down to the lower time frames earlier. There's a sexy point of interest, guys. A nice one. Beautiful pin and beautiful momentum away. So obviously we can see that whatever momentum came in, you can see there's a whole lot of chop going on inside of this area here. If there's one area that I can say sellers came in from here, it's the most obvious area where we can clearly see that rejection, that momentum to the downside. That momentum came in from this area here. So if there was anywhere where I want to sell where other sellers were selling, which is that POI over there. So for our sell bias trading opportunity, we've got a nice POI over there. Maybe let's see if we've got a POI down here for any bullish buy trading opportunities. Okay, yes, we do. Unfortunately, it's just below that level of structure, but we do have a nice POI over here. So obviously looking at all of this nonsense that's been going on there around where we want to trade, we can see that there's been nice momentum over here. Bullish engulfing, price action has never come back into this area of demand. So let's just go back to the most recent price action over there. Cool. So now we've got a point of interest just below. So obviously if we fail or if any setup fails, we know that our lowest buy will come from this area here. If we don't see any reversals forming inside of this point of interest, then we're not looking to buy at all. So the only points of interest that we have here is our support trend line, and obviously this nice POI here from a higher time frame. Otherwise, for sells, we're exercising some patience, guys. We're exercising some patience. Guys, bullish bias on US30. Thanks so much for being part of the session. I want to cut the session short because I still need to upload this session on YouTube for our weekly market forecast.
So you will start one. So
Pardon?
will you start one?
Yeah, we start in 1 hour. We start in 1 hour, exactly 1 hour.
So will you start 1 hour later session with me?
Yeah, our session is going to start in 1 hour. So exactly 1 hour from now, I'll send you the session link.
Okay, on my Discord link, on my Discord ID, you will send the link on my Discord ID.
Yeah.
Okay.
100%.
Sir,
100%.
Sir, I am biggest fan of the ref wine and let's this is my.
I can see there.
Ref wine. Shaya.
Oh, this dude's got ref wine as his wallpaper.
Yes, what?
Ref wine, and it's a damn nice picture as his wallpaper.
The most famous trader in the worldwide, most trader famous one.
Yeah. No, definitely. I can definitely say that guy, he's definitely got a unique way of thinking. If you listen to him speaking, he's definitely got a lot of experiential knowledge, like a lot of experiential knowledge. And because he's so connected, because he's so connected to people that we don't generally have access to, there's a lot of inside information that he has. he knows a lot of things that a lot of the general public don't know. So yeah, I think he's a very nice person to follow and to just listen to speaking. Yeah.
But you meet with Dr. Rahwan, sir?
Sorry?
But you meet?
Yeah, we've been together. We've had opportunities to sit and to have some very long conversations.
Okay.
Yeah, that's what I'm saying. Like having had the opportunity to actually speak to him, there's a lot of experiential knowledge. Like his life, there's so much lessons to learn, like just generally from his life, like finding out, man, like how was it for you making so much money at such a young age? What was the challenges like? There's just from his experiences of the way he's lived his life. There's just so much to learn from just how he's been living. Yeah.
Okay. How much long are you in Forex trading, sir?
I've been trading for 4 years now.
Okay, 4 years.
Yeah. So it's not the longest of time, but I've chosen to take this as my career. So you can bet that I'm gonna be adding a lot more years onto this.
Okay. Sir, I want to become a full-time Forex trader. It is my main.
Do you currently have other time commitments? Are you working a job now?
No, sir.
You're not working a job.
I left college and I want to learn Forex trading.
100%. All right, no stress, man. Then let me see you in our one-on-one session there. Let me end this session just so that I can upload the session on YouTube, and as well as so I can have something to eat, guys. It's lunchtime now. Otherwise,
Thank you, sir.
thanks,
Thank
guys.
you.
Cheers.